Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Well, let's get started on Exhibit C. I'm very proud of Exhibit C because I redid it over the weekend and it makes much more sense now, I think. So the top line on Exhibit C, for those of you who have access to it, is surplus crude capacity. And what that means is, for example, in 2022, with 2.4 million barrels, that was Saudi Arabia at 10.6. And Saudi Arabia is generally expected that if they had to, they could do 12 million barrels. So 1.4 million of the 2.4 was Saudi Arabia, and then the rest is kind of spread out. UAE, for example, possibly Iran. And the interesting thing about this chart is that as I look at the numbers for 26, it looks to me like the surplus crude capacity is going to be back down to around 2.5 again. And you see Saudi Arabia at 10.5 versus 10.6 in 22. Russia's down a little. And I think part of that is, Ukrainian drone attacks on refineries and whatnot. Iraq's about the same. UAE is up a full 1 million barrels a day. And they have spent considerable amount of money building that capacity. But what does this all mean? I think what it means is that the $62 oil price has done its magic, so that I think by the time we get to this time next year, we will not have that 4 million barrels, or in 24, 4.4 million barrels of surplus capacity. And it's happening without that much increase in demand. For example, look down at liquid fuels consumption in 22 was 99.4, and it went all the way to 101.8, then 102.9. But then it really slowed down in 25. It's up only 500,000 barrels. And then it accelerates a little bit, 26 up 700,000 barrels. So I don't want to be premature about this, but I think that the chance of running oil into the 50s or high 40s, I think may have come and gone, partly because of the Ukraine war persisting, and part of because the Iranians being intractable on making a deal to lift their sanctions. But part of it is just supply and demand working. And in fact, if we go to the bottom of Exhibit B, last Thursday anyway, the prompt barrel, the next month barrel was 64, and there's no more backwardation. Backwardation meaning the futures price is lower than the current price. That's gone. And so the futures market is kind of indicating that. Gas, by contrast, is kind of weak relative to where it was earlier this year. And the 26 contract is still at $3.95. Price is going to average $2.65 in 25, but that's because there are a lot of earlier months at $4. I mean, the prompt month is $3.10. And so what's going on here? If we go up to the chart of production demand, first of all, there is this year and will be next year an increase in supply. If you go to the top line, the increase in supply, 23 to 24, was pretty low, 101.8 up to 102.1. Well, what happened is, having averaged $6 to 22, you're down to an average of 275 and 23 and 240 and 24. And that caused supply to decline. But look at the supply increase, 25 versus 24. It's up almost 4 Ps a day. And that's because, frankly, the price recovered. A lot of that is from the Permian. And in fact, as we sit here, Permian prices, which are the Waha, are trading in negative territory. So with all the publicity about AI power demand, the use of gas to make power is flattened out. There's two possible explanations for this. One is more coal plants are remaining in operation under the Trump administration. The other thing is all the wind and solar that was set up by tax incentives before the big, beautiful bill is all coming on now. Probably those are about equal. So it's not to say there isn't some increase in power demand from AI, but it's certainly not finding its way to gas. When we get to Exhibit A, this will be in the news a lot because the House passed a bill to extend the period to not have a shutdown to just before Thanksgiving. The Senate tried to pass the same bill. They weren't able to. They need 60 votes. So unless there's some compromise, we will have a government shutdown on October 1. Sure. Part of the Trump administration, especially the Russell Vought, who's head of budgets, he's been planning for a shutdown ever since he was nominated by Trump. And I think the Democrats know that. And so the question is, from a political point of view, if there's a shutdown, from a political point, who will win the shutdown? And Russell Vought and a lot of the more conservative parts of the Trump coalition are really looking forward to a shutdown. My guess is that Schumer and Jeffries, the leading Democrats in Congress, will make some kind of a deal just prior to October 1, but we'll see. And the deal will only extend the wait period until probably just before Thanksgiving. What should happen is all the 12 expenditure bills should be passed by the House and the Senate. I believe the House has passed all their bills, but once again, in the Senate, you need 60 votes. Democrats are holding out primarily for restoration for some of what they consider to be unwarranted cuts in Medicare and tax subsidies. So we'll have to see. We'll have to see how it looks over the next couple of weeks. Anything else, Jason or Mike?
I guess in relation to tech companies is the changes to the H-1B visa program. The White House is shifting the fee. I think it's roughly $2,500 to apply for the company to apply to have an H-1B visa for an employee, and he's moving that to $100,000. So quite a big jump. There's certainly arguments for and against this action, but I think $100,000 is a pretty big number per employee.
Yeah, if I were to justify it, I don't know. Yeah, I don't really want to take a side on this because there are positive things, some really positive things about the H-1B program. Yeah. We have a lot of friends that got them, have them. One of the most unfortunate things I think about it is that a lot of people are on H-1Bs for over a decade before they're able to get citizenship, and that's the negative and it's mostly largely tech talent out of India, and when they're on the program, they're kind of beholden to the employee. They get paid less and they have less job mobility. So, yeah, I think for the people that are talented enough to get jobs at Google or Amazon or some of these really good tech companies, that's great. I think some of the IT consulting firms that pay below market wages, pretty significantly below market wages to their H-1B employees, and their staff is pretty predominantly populated by those groups, that's a different story.
Jason, what are the arguments for having Google have to pay $100,000 to the extent that they want to recruit engineers from India?
Well, the White House will give the argument that we should be training and recruiting American engineers. I don't, except for in the last couple of years where the job market's been very tight for the people in that industry, there was not a problem for Americans to find jobs at these companies. And I guess the argument is to raise money to pay down the debt.
Right, but there's also a point of basically outsourcing the filtering of talent, so that way the government's not the one that's deciding who comes in. And if you allow the companies to filter the talent so that we're getting the best and brightest through our immigration policy, that sort of makes sense. And by increasing the price, you make that bar pretty high. So I don't know if you can increase the price to $100,000 per applicant and maintain the volumes that we've had before. I'm not really sure about that, but
Doubtful. I guess the counter argument is
there's a lot of people that wish they could get H-1Bs that haven't been able to get them.
just limiting it to the best. I think we want all educated professions here.
Right. Right. Trump, during one of his interviews, I think with the All In people, proposed that any foreign national completing school in the U.S., college or community college or whatnot, be given the right to get a job here and stay.
I think that was caveated with being in a field which we need more of. Right. So if we're undersupplied in a particular field and somebody comes in through the university system, we should staple a visa to their diploma so that they can come and work in this country. But we do ship a lot of people back over.
Right. Good. We've blown through a lot of time here. Can we do a 6 or 7 minute biotech thing so we have some room for the page 1, 2, and 3?
Absolutely. So I guess today we'll jump into the history of Genentech. Where we left off last week was discussing the invention of antibiotics and an initial discovery of insulin and production of insulin. The problem with producing insulin during that era was you needed cows, and the product was not human insulin, and it wasn't pure. So, part of the push in Genentech's early days was we needed pure human insulin. So, leading up to that, in 1973, Herbert Boyer and Stanley Cohen pioneered gene splicing. So this was the effort to cut bacterial DNA and splice in foreign genes. And they were using restriction enzymes, which we hear a lot about more in the news lately with CRISPR. But they were cutting pieces of DNA from one organism and inserting them into the DNA of E. coli bacteria. So this itself is recombinant DNA, the spliced together product. And they proved their early success with when the bacteria then was replicating and keeping copies of that spliced in DNA. So the two of them realized that this would enable producing human proteins out of bacteria. And that's really the definition that we had of engineering biology and the definition of a biotech. So in 76, Boyer met up with Bob Swanson, who was a young venture capitalist, and together they devised the idea of creating the first VC-backed biotech named Genentech. And the goal was to commercialize this recombinant DNA technology. So last week you asked about if insulin was their first product, and it turns out it wasn't the first thing they set out to produce. They were first producing a hormone named, I always butcher the name of this, somatostatin, I believe is how it's actually pronounced, but it's a human hormone. And they were successful in engineering E. coli bacteria into producing this. But there were some problems with the commercialization effort, and it never ended up reaching market. So the second product then that they went after was human insulin. The first challenge was isolating the human genes that code for the production of the protein. But upon having that, they were able to engineer the recombinant DNA, again, trick E. coli bacteria into producing human proteins. And in 1981, the FDA ultimately approved this first recombinant DNA drug, and the brand name was Humulin. So the process there was they engineered the E. coli bacteria, they fermented it, they purified the insulin out of that fermented product, and then had packaged insulin available to diabetics. So obviously this is a huge blockbuster for them. And in 1980, they IPO'd, and it was the largest IPO at the time. And in the years right around 1980, the rest of the gens were all founded. So Biogen, Amgen, Genzyme, all the early biotechs.
So also during this time, that's call it the 70s up and right into the 80s, a lot of tools were developed that really formed we talk about this in software a lot, like in software, certain open source packages and certain languages and libraries, they all get developed over time, and eventually these tools come together to enable breakthroughs in later points in time. So a couple of the tools that are also pretty relevant from this period are, I'd say the first one is PCR, which we're all familiar now with PCR testing because of COVID. We all had these PCR tests. That technology basically was a method to amplify DNA in a test tube, basically making copies of genetic sequence in a short period of time. The origin story of PCR testing is, I'll call it a very California story, so you'll enjoy this. A chemist, Carey Mullis, later admitted that his creative inspiration for this process came from a very unconventional mean, that being LSD trips. As he described it, he would visualize this process, and he said, I could sit on a DNA molecule and watch the polymers go by, noting that he seriously doubted he would have ever invented PCR without using LSD. So Mullis actually ended up winning a Nobel Prize, and PCR revolutionized biotech. Essentially, any lab could now make copies of DNA from a tiny, tiny sample. So it was useful for gene research, medical diagnostics, forensic testing. So, and maybe we'll get into this later, but Jason and I believe that long-term PCR is still gaining traction in a way that's going to be more and more commonplace in the future.
It'll take a bit to top that anecdote.
Yeah.
Shall we switch over to the early pages in healthcare, and then you'll have a whole week to see if you can top that. You can top doing LSD, winning a Nobel Prize, and get a lot of money for forming a biotech. That's I don't know whether that's California or where it is.
It's definitely Los Costas, California, I think.
You usually hear that story with tech companies here.
Yeah. But remember, Genentech's founder, just to tie this back to tech, was a client of one of the co-founders of Genentech was a Kleiner Perkins partner, and I guess he quit his role at Kleiner Perkins, if I remember right, in order to go and co-found that company. Mm-hmm. So,
yeah,
pretty cool.
Okay, let's take a quick break for a message from Oakcliff Sailing.
Hi, Dawn Riley here. I am not at Oakcliff today. I am up in Newport, Rhode Island. I'm at the Sailing Museum, which houses the National Sailing Hall of Fame. And last night I was up in Bristol, Rhode Island at the Harrisoft Marine Museum. And there we got some backstage tours of some amazing Harrisoft models in his workshop, kind of like behind the scenes, which was impressive. There was also a great group of people in the room. Gary Jobson and Tom Whidden were the co-MCs. And we had a lovely event for all of the people who donated both to the Sailing Hall of Fame and the America's Cup Hall of Fame, two separate but connected halls of fame, which last night they were honoring the dual famers, and I am honored to be one of those dual famers, and it was just a strong room. So today is a cocktail party here at the National Sailing Hall of Fame at the Sailing Museum. I am on the dorade deck up here, and there is also the Mossbacker room that is around the corner, which is a great place to kind of just hide and have private meetings. Downstairs, there's a J24 that I think Kenny Reed may have modified. There's a Moth. There's some high performance. There's stuff on the America's Cup. There's a lot of interactive games, and you might, if you're here, hear my voice in some of them. And it's a great place for our sport to be able to showcase all of the technology that we have going on. And it is something that was a long time in the making, and I hope that you come and enjoy. On the other hand, if you have a few extra dollars, Oakcliff is doing some significant campaigns of fundraising. We have to buy some sails for our 40s and for our match 40s. So we're doing a capital campaign, and we're hoping to secure our footprint of our space, our place to call home. It won't be quite this fancy because we're a working nonprofit and foundation, but looking forward to seeing you in Oyster Bay at Oakcliff. And if you're in Newport, you must stop here at the Sailing Museum.
And now back to the show.
Should we do healthcare before we do the early pages? I know you people are spending a lot of time on Harrow. In fact, Jason's coming east to attend Investor Day for Harrow on Friday, but
That's right. So
I guess they're making progress of sorts.
I should have a good update next week. But this week, the controversy is all surrounding Tylenol. President Trump and HHS leaders announced that as part of their investigation into the causes of autism, they've decided to link Tylenol use in pregnant women to autism, development of autism later in a child's life. So there are a number of studies that suggest use of acetaminophen should be limited during pregnancy. From my reading, those studies all looked at ADHD primarily, and then other cognitive disabilities, and none were specific to looking at autism. But the evidence really is mixed. So for every study that says acetaminophen use should be limited, there's another one that says there's no correlation and it's probably safe. And I guess anecdotally, Tylenol has been in use since the 1950s, and the huge uptick of cases of autism is really only in the last decade or so. So I feel like it's kind of a stretch to link those two, unless we dramatically increase the amount of Tylenol we've been using. But I doubt that's the case.
Yeah, this one's really interesting because I talked to my wife about this, and she does all the research on everything. So I kind of like bouncing some of these things off of her. And her point was, when she did the research before we got pregnant with our first, the data on getting sick, just broadly getting sick in your first trimester, is really bad for the health and outcome of the baby. So there may be a piece there too. And the other thing that she pointed out is that Tylenol is the only painkiller that's approved when you're pregnant. So that, if we take Tylenol out of the mix, there's no painkillers left that are available.
My response was Genavix.
Maybe, yeah. It hasn't been tested yet, but yeah.
It hasn't been tested, yeah.
So,
Right. News on the early pages. I mean, Apple, which Jason's been fairly negative on, seems to, the way AI is progressing, or apps for AI are progressing, Apple may come out of it all right. And I'm looking at page 1 and I'm citing across the CapEx of Amazon, Alphabet, Microsoft, which are 90 billion, 65 billion, 65 billion, and Apple sitting there at 12 billion. If they come out in very good shape with outdoing their own language model and having apps be able to, be hosted on their iPhones, seems to me that's going to be a victory of sorts. Or how does it, Jason, you're the Apple bear, how does it look to you?
I agree. My criticism has mostly been centered around innovation on the hardware side and lack of innovation on just the general software products, and is exemplified by their kind of belief
so
that...
you've been bearish about everything, their hardware and their software.
Yeah. Well, it's not, I guess, to say not specific to the AI and lack of AI development. I know that piece is going to be extremely difficult to do properly and give an AI tool access to all of your apps in a secured way. So if your AI was compromised, which I don't think we fully understand how personal AI is, all the methods that we can compromise it. But if it had access to your bank accounts, that's a big problem. My criticism is the phone hasn't changed in a long time. The software has been getting buggier. It's all the promises that early Apple gave you, that software is dramatically better than the Android ecosystem, and the phones just work better. Those promises haven't been true in the recent years, but we're starting to see that they are innovating with things like the iPhone Air. It's receiving a lot of rave reviews. I went by an Apple store over the weekend. It was packed, which is the first time I've seen that in a long time. And the latest operating system update was a dramatic performance improvement, which Mike and I were just discussing. Has that ever occurred?
Yeah, it's Jason upgraded before I did, because I always don't upgrade because it usually just makes things worse. And he said, you wouldn't believe it. It's actually better. So I updated a couple nights ago, and it shocking. iOS 26 really is better.
And they've faced lawsuits where the updates caused battery life to decrease, and it was a measurable performance hit that resulted in them having to settle a lawsuit.
I'm not sure that this isn't eating my battery faster, but I know that at least it's faster to use.
We're happier about it.
Yeah.
You know, the other pair I'd like to call attention to is on page 2, the software page. Oracle is running big CapEx relative to its cash flow. It has negative cash flow, and it's signed up to provide all this compute capacity to OpenAI. And Broadcom has practically no CapEx. So, it has a lot of free cash flow. Oracle, despite the run-up, is, around $900 billion. Broadcom's $1.6 billion. Broadcom seems to be benefiting from people like Google using alternatives to the NVIDIA chips. Are we to think that Larry Ellison, with his own position in Oracle, and the rest of his stockholders are taking on risks that that most people would probably avoid?
Hard to say. They just changed their CEO. They promoted 2 guys as dual CEO that are part of the cloud division. So I think that group is getting a lot of credit for being ahead, recognizing where data center was going. And they were able to build out and set up sites and basically be ready for this onslaught of demand for data center. Is OpenAI going to be able to make good on that $300 billion deal that they've agreed to? It's hard to say, especially now you have NVIDIA, committing to fund $100 billion. So, maybe there's a path there, but I don't know. I think with most things, like you kind of get a little bit lucky in that there's some really, really advantageous things about the way the Oracle database works and how you can move a model and the training data and all that stuff into a data center. But they clearly did get ahead of the data center demand curve. So I give them that. Yeah.
And it's a positive for NVIDIA, since Oracle doesn't have their own chips division, and they're pretty committed to building out NVIDIA-powered data centers. Where the other hyperscalers, once they have a defined workload, such as Google that we talk about, they're going to deploy TPUs.
I'm going to update page 3, which is the NVIDIA page this weekend. But NVIDIA continues to be extraordinarily valuable. And if you just cite along that equity line, its equity value is $4.4 trillion. Just citing along page 1, Apple's 3.5, Amazon's 2.4, Alphabet's 2.9, Microsoft is 3.8. It's incredible to see what they've been able to do. And of course, their margin is extraordinary. This is on a kind of a steady state business. It has some combination of trailing 12 months and steady state, but I mean, we're able, it's bringing half of its revenue down to free cash flow. Or look at it another way, NVIDIA has, under $200 billion of revenue. Apple has 400, Amazon has all the retail, but they're just under 700. Alphabet is just under 400. Microsoft is 300. So just really extraordinary profitability. How sustainable? I guess Jason took the lead on Apple with Mike. How sustainable do you think that is for NVIDIA?
So as long as people are willing, let's put it this way. Today, every time NVIDIA releases a new chip, it's an obvious ROI to invest in that chip because your cost per, let's just use cost per token if we're talking large language models, that goes down. So from NVIDIA's perspective, all they can do to keep things going in that direction is to continue to produce better chips. On the demand side is a more complex analysis, because when you look at the economic value created by AI, it's relatively hard to measure because it's not really accruing directly to anyone except for NVIDIA. If you look at OpenAI's revenues, for example, they're spending a lot more than they're making. So can OpenAI logically justify investing as much as they are in NVIDIA chips? Well, yes, because they're in a competition to win and become a platform, and they're trying to build network effects into their products so that way that they're in a winner-take-all business. But if that funding dries up, what happens to this market? NVIDIA is going to be left with a lot of inventory to sell. And so NVIDIA has been making some steps in order to make sure that doesn't happen. You could argue that $100 billion investment in OpenAI is a step to make sure that doesn't happen. If that did happen, OpenAI wouldn't have that funding. Maybe they would have to curtail some of their free usage. And maybe that would be the opportunity for somebody like Google to continue offering the free usage because they've got the balance sheet and the cash flows to support it. And they would get a lot of switch over from the free usage tier of ChatGPT over to Gemini. So, that's if that public and private market funding dries up. As of right now, there seems to be there's capital on the sidelines in money market funds. There's an extreme amount of that. There's a lot of private credit funds that are very excited about funding these data center build-outs. So right now, it feels pretty frothy from a lot of perspective, but the technology is still advancing very quickly. I don't know the supply side. I'm pretty confident in NVIDIA's ability to execute, but on the demand side, there's more complicating factors.
Right. Well, now 7 minutes over. More on NVIDIA's position next week, along with more of the biotech history. In the meantime, everyone be well and stay healthy, and we'll be here exactly 7 days from now. Thank you so much. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.